what I first do, Brad, is just go over with these guys, what's been going on week to week. A lot of these guys are in the trading room, and so they're in touch with what's going on and what's flowing or what's driving the market. Because like U.S. China for indexes pretty much priced in that they're going to have a deal, and the bigger surprise is that they won't or something backs out. Now there's some chatter about European Union putting tariffs on us and vice versa. That was just talked about on Bloomberg a little bit for the first time today. As you guys know, Brexit, I get sick to my stomach just talking about it because it's kind of important, but it's just, ultimately they're just going to extend the deadline to 2029 and not get anything done. And so you got to watch the pound if you're that interested in how much an important Brexit is on all the markets. The pound's been the most sensitive to those developments. But the next driver that's a surprise is if they don't have within a month or so this U.S.-China deal inked and done, because they're pretty much pricing that in. So one way, if they do get a black and white kind of, hey, President Xi's coming tomorrow, they're going to sign it April 19th or whatever, I think it's a knee-jerk rally and they might hit it and they might sell the news. So you got to be prepared for that. The market's not stupid. It's got that priced in based on the last kind of rounds of optimism from both sides. Don't let that catch you by surprise. The biggest surprise, if it's black and white, Trump or Xi or someone higher level says, you know what, we almost had a deal and now this or that. And so something that's negative, and if you're in front of your screens, you should know that's pretty bearish for stocks in these indices, and don't let that catch you by surprise. There's a reason why they call it a surprise, right? Nobody's expecting it. So that's kind of the drivers that are up now. Dow's been weaker here and there because of Boeing down 4%. Not as bad today. They're having too many issues with building too many of those planes that now they're not going to be able to sell. You're going into earnings season as the first quarter ended. You get this advanced GDP coming up. That'll be an important number. It was kind of a relief on Friday that the number didn't miss 20,000 like it did the previous month. So it came in better than expected, but it didn't come in at 50,000 or 20,000 or something. It would have been back-to-back bad months. So the market like that. And then finally, the Fed is right where Trump wants them, not cutting rates, or not raising rates rather, and a dovish tone. We always say equity markets are like spoiled brats who want candy. They want low interest rates and they'll cry if they don't get them. Well, they got them. Some people are saying, well, they're so dovish. What do they know that we don't know? So I think there is like European weakness, and we know that, but people want there to be almost economic weakness in the U.S., I think, and they're trying to find reasons why there is a 3-month, 10-year inversion, but I think they're guessing. The stock market hasn't started pricing one in yet. And so those are the things that there's not one clear great driver. The one was U.S.-China trade, and that's starting to get resolved and not be the, as front and center as it was a week, 2, 3 weeks ago. It can again if a surprise hits and it splashes and becomes a problem. So let's roll right into Brad Jelnick. He's a guy that's been here a few times. You guys really like him. That's the feedback I always get. I knew they would, Brad, but they really enjoy these appearances. He has a podcast, My Trading Life. Is it My Trading Life, Brad?
It's called Trading Life Podcast by Brad Jelnick, I believe it's called.
Trading Life Podcast by Brad Jelnick. Many of you guys subscribe to it and listen to it, but if you haven't, do it and subscribe, because then you get notified when he posts a new one. How many times a week or month?
I haven't done one in a while. Sometimes I'll do 3 in a day for short ones, and sometimes I don't go for a few weeks. It kind of depends. I try to only do it when I have something, I'm inspired by something or I have something to say. When I do, sometimes these will take my thoughts for a while and then I won't do one. So it comes in waves and bunches.
What I like is it's a podcast that's short. They're all like 2 minutes, 3 minutes, 4 or 5 minutes. And so it's not some guy rambling on, because what you get with podcasts is you get someone who's really well spoken. They talk for an hour and you get lost in what they're saying. They have like 50 great things they said. People can't pay attention that long. It's just that's the case. So it's when it's one guy talking, so he keeps them short. And that's what I think a lot of people like about that. Right now, all you see is the logo I'm not showing anything else. It's just audio and logo. We're going to show Brad's screen, but we're going to get into some topics and then open it up to Q&A. So I've been telling guys, Brad, to bring their questions, and a couple guys gave them to me. But then also, hold on a second, we wanted to kick off talking about, now if you don't know who Brad is, in 20 seconds, he got hired at the same firm I worked at. What year? 2002, 3?
2000, early 2003, I believe.
Early 03. He was probably the 35th trader there, 40th trader there. Went up over 100, but he went from, how long did it take you to start making money? 4 months, 5 months?
Probably 6 months. And then that can be misleading. It's different times too. It's really hard to, it's kind of like I have these sleep trackers I wear, and they say, don't compare your heart rate to the person next to you and other things like that, because it's like that, where it doesn't mean that you should or shouldn't make money faster. Doesn't mean you're going to be better if you make money in 6 months. It might, but it might not. So I want to hang on that too much.
No, right. I'm bringing it as an introduction. Like he came in, started doing, because I turned the corner pretty quickly too, and I agree with you. It's not, well, if you're not making it in 4 or 5 months, he did. What's the matter with you? It's
right.
Different. And especially with what I want to press upon guys is that everybody's routine is different. There's a lot of guys that are full-time pilots at United. There's a doctor. There's this or that. And it's fine to be dedicated to this, but you have to have perspective and be realistic that you're a doctor. You want to get good at this, but it's going to take you longer, and you can't expect the kind of rewards as if you were doing this full time every day. You're going to miss some good moves because you were operating on someone's brain, so you got to take that you can't let that upset you. And it's good that you're doing two things. It takes the pressure off. And when you do have a routine and you are focused on the markets, you don't get anxious. You shouldn't get nervous or beat up because you're doing something else. Keep that all in. That's kind of what, Brad, you're saying, right? Because people are dedicating different amounts of time to this with different market conditions.
Yep.
So the question I had for Brad, how do you approach in the past and now slower markets?
I've told this story before, but real quick, can everyone see my chart? My lift chart, just making sure that they can see that.
No, I you know what? Let's show it. That's a good idea. Do it again, same way as before, because I took it back.
Oh yeah, we don't have to talk about. I'll talk about something else first, but I just wanted to make sure if I do have a chart that everyone can see it. So share, and okay, all panelists. Give me 1 sec. I want to show them the screen. So now you should be able to see.
Yeah, it's loading. There you go. We got it.
Chart of lift.
Lift, indeed.
Okay.
Hey, wait a second. Before you get into the slower market things, now Lyft is when is the IPO? When was the IPO?
The IPO was right here on the 29th of March. When the hell was that? That was last Monday. No, it was April. Sorry.
And it was what?
Friday, last Friday. Opened at 88, yeah.
And did nothing but get hammered. Kind of like Facebook on their IPO.
Yeah, I can talk about, I did a trade in there I can talk about later if you guys want.
All right, yeah. All right, so what would you say with, in the past when you were always trading futures, you're every day involved and the markets would ebb and flow and it would get slow?
Sure, yeah. What we did, Brent and I, a guy I traded with and a friend of mine, he and I used to watch this, you guys are going to laugh. We watched Deadwood, the TV show on HBO, in a really slow August when there was honestly nothing going on. We maybe had 3 moves a week, 2 moves a week, and there's just not anything to do. So everyone was banging their heads against the wall and over trading and just super frustrated. And we sat there and watched the show and laughed. We prepare for the day, obviously, and talk about scenarios, but we would wait. And then when something would happen, we would look over at it and say, oh, this might be happening. And then we'd pay attention and make a trade, go back to the show. And we ended up trading way less and making more money and then when it got busy, we were focused again a lot more. And we look back at that and say, boy, I wish we could always do that. and recognize the environment and not have to push and force when it's just not there, which is, I still struggle with that all the time. But that was an example of when I did it, when I was smart about it. Distracting myself with something. It's hard to read books or things like that when you're looking at a market, because it's like trying to read a book when you're sick or something. I've never been able to do that. But a lot of times if I have research projects or things I'm looking into, looking at my trades, I can do that while I'm waiting for something. But it's really tough when you're watching the market all day and expecting to be able to wait and be so disciplined where you can just wait for the right time and then do the trade. It's almost inhuman to be able to do that. You have to have some sort of a setup in terms of, if this happens and that happens, then I do this. Or that's why you pay attention during a Fed meeting, or when it breaks a big level, or when something happens in the fixed income and the equities aren't reacting. Like, those are the times you start zooming in, because you might find something to do, but you can't just zoom in the middle of chop. Like, the middle of the day is tough. I think the first 15, 20 minutes was always tough. I never used to trade the open. I didn't understand it. I don't really like the last 15 minutes either, unless it's a big move down or a big move up and I'm riding it into the end of the day once in a while. But I like that morning after the open. I like the afternoon, and those are the times where it seemed to make more sense to trade. This is not anything that people don't know, but just reinforcing that.
No, there are a lot of people that don't know that or forget that. I mean, that's really important. When you have too many trades in a slow market, you never have anything to show for it. If you're lucky, you just burnt through a lot of commission, and that's truly what over trading is. I think they misidentify over trading. You're supposed to over trade if it's busy and you're seeing your stuff. You're supposed to have a lot of trades. But you're not. If the volume is low, your volume should be low. That's the way I always looked at it. If the overall volume in the market was higher, your trading volume should have been higher. And
Right.
if it's lower, it's lower. What was your step one? I would call it step one. What's the first thing that Brent and you would look at to kind of get you to sit up in your chair, let's say, back in that day when it was slow? You're watching the show, and then all of a sudden.
Well, you notice that volatility is low. You notice that people around you are frustrated. You notice that the market's grinding higher and not having big movement. Everyone knows when a market is normal or when it's unhinged. So, for instance, I'm in a stock group with some guys, and one guy had a really good. I'm going to get away from the question, then come back to it. Kind of. One guy had a really good point where something like Bollinger Bands work really well in a normal market. So when it's choppy and normal, it works really well to kind of use those edges as a place to get in and get out when you have an idea. But when the market becomes unhinged and the volatility picks up, or there's a story, you don't want to look at that stuff because it breaks through and it makes trend moves. So identifying where we are and what the personality of the market is super important. And so Brent and I would look at it, and you kind of knew when we were in that dead August. We're not there right now, but you'll maybe see it this summer. Sometimes it gets really slow and sometimes it doesn't. But in the summer, and oftentimes over the holidays, but not this year. We saw what happened this year. But it gets really slow, and you can just see the volume dry up, and you can see that the data doesn't really move us and nothing really matters. And it's just taking stock in that. You don't decide when you make money. You make money when the market's busy and you come in and coattail on other big players. It's pretty much what we do. And you can't do that if there's nothing to do. I remember when I first started having this desire to work hard and get up every day at 5:45 and get in front of the market. It's not that it's a bad thing, but it caused me a lot of distress because I would always expect to get results from that. But what if I'm doing that at a time when the market isn't moving? I'm just frustrated that I'm not getting results. And then you have to be ready when the market's ready. But in some ways, you have to always be ready because you don't know. So that's why one of the questions I would always ask myself during a day was, what is the biggest surprise that could happen today? And that would open my mind to different things that the market didn't see coming. So when I'm in the stock market now more than the futures market, I'm learning things that I wish I could have known when I was trading futures in terms of what moves things. So it's not the retail sales that moves the market. Sometimes what moves it more is the lack of reaction to a big report. But what moves it even more is you figuring out that everyone's positioning 2 or 3 days before the report. And those huge trend days that sometimes happen seemingly out of nowhere on no news that you're fighting or you don't understand are positioning going into something. And then you find out later what that reason is. And if you can learn to think that way and learn to play with that, I think that's a huge advantage. So in stocks, the way it often works is there's a report, and maybe a company has good earnings or something, and 2-3 months, maybe not 3 months, but maybe a month go by, and it gets boring, and it's in between the next report, and everyone forgets that they just had a good report. So it kind of comes off with the market. Maybe the market goes down, pulls it down. It gets really quiet and really boring. And somewhere in there's a great trade, just anticipating another good report from the company. And that happens out of nowhere quietly. You can kind of see that happening. And then when the next report happens, it's a crapshoot. Is it going to be good again or not? But that's not really the point. The point is they're positioning ahead of time for that. So if you can keep thinking, what's tomorrow's newspaper going to say? How can I get in front of it? How can I, in really gauging I like to read, I started reading way less macro these days. So I don't really look at, I used to read everything, The Economist, The Wall Street Journal. Now I just look at the headlines, and I look at what are the headlines that smart people are going to be reading and getting influenced by. Not idiot headlines on Yahoo Finance that no one believes, but things that, repeated stories about how oil companies can't make money because of this and that, or there's tankers in the ocean that are storing oil. I remember in 2009 we had that story. And all these things happen that get everyone thinking that only one thing can happen. And you look up at the price of those things and they're beaten down to 20-year lows, agreeing with all the negative news. So at that point, you're just waiting for something to happen on the other side. So I'm trying to think that way more. So it's right. Okay. For instance, right now in the market, I'm noticing that no one wants to follow this rally. And it seems like it kind of went without everybody. And slowly now I'm noticing that people are getting a little bit more behind it. There's still a lot of skepticism, so we could grind up a lot more. I don't know when it's going to end. But one thing I do notice right now is that there's a lot of stuff going on that could spell a change, meaning that the dollar, we had the Fed capitulate, and that was a little while ago now. But looking down the road, I think we're going to look back, and that's a huge thing. The dollar has stayed strong when the Fed has basically stopped raising, which is a little strange. But then you have this big move in Bitcoin and cryptocurrencies, which is kind of an anti-dollar move. And then you have all these currencies like the euro and the yen are all beaten down against the dollar. You have all these precious metals. Look at oil services companies, OIH. They've been sleeping for years, not moving at all. Precious metals, oil companies, gold, silver. Look at agriculture, how bad farmers have been losing money and getting hurt. And we have a 2020 election, all these politics and all these voters in those districts, and they have had a lot of pain. So it would make sense that someone would want them to have less pain going into the election. And I'm looking at all these things, and it makes sense that if the dollar turns lower, which I feel like it could, there's a lot of things that could really rally. So I'm looking at that, and when commodities do well, stocks often don't do well. So I'm not trading right now on this, but I'm thinking about all these things that are starting to line up and understanding that if I think about them ahead of time, when the trades start happening on my screen, I'm able to react faster. I'm able to start seeing it. And if I hadn't thought about it before, I end up just chasing it at the end or in the middle, and it doesn't work well. So I'm trying to, so if it's during the day or if it's over weeks or months, you're wanting to think about what might be the next anticipatory move you could do, not following the last thing. So the last thing I'll say about this is for China, we have in what Tony just said is totally true about, yeah, there's this deal that seems to be priced in, and the biggest thing for a day trade absolutely is there's no deal. It's a huge day trade without a doubt. But then if you zoom out a little bit, the Fed capitulated, so that surprised everybody. They did a flip-flop, and then we had this massive rally, and that's part of it. And then you have people just kind of shunning the market and saying we're in a bear market and we're having this big rally, so it's counterintuitive. And then you have the China deal and the North Korea deal. We'll see on that. But eventually what happens is the market runs out of the wall of worry. When the wall of worry goes away, so the Fed went away and maybe China goes away, and that's solved. Once that's solved, it's like the all clear blue skies, and that's when the market's going to struggle, I think. Maybe not right away, but eventually, because there's nothing, when you don't know where the bad news is coming from, that's when you don't want to be long. You would better off being long when there's all this bad news, because everyone just doubts it all the way up, and it creates people selling.
Yeah, because when the bad news gets like optimistic, they rally.
Yeah.
Right? It's a worry. No, it's not. Yeah, it is. No, it's not. And then when it goes away, it's like, what do we talk about now?
Yep.
What fuels us now? It's not the optimistic comments on negative news or no trade or Fed. So then it almost walks into it, that chop, right? One thing you said was following the coattails of bigger players. And that's part of anticipating what they're trying to do, right? To price in, whether it be good earnings or this China trade deal, right? Is that what you, and even back in the day and today, try to do?
Yeah, and I get better. I feel like I understand it more now. Back in the day, I was good at really preparing for events and Fed, ECB reports and all that stuff. What I'm picking up now, which I think is going to help me even more, is I remember back in the day, I'd be kind of mystified by a huge Tuesday rally where it would go up all day, and then on Friday there'd be a really good retail sales, and the market would just kind of struggle. It would pop, and then it would kind of come back off. And looking back at it, that's just how the game works. There's everything's 3 days before, 2 days before the positioning is happening. And if you can kind of get an idea of that and start learning to think that way, it really helps you out because it opens your mind to things like that. Like the explosive rally on no news, oftentimes the biggest rally. Or when there's news that seems big and we can't follow it, that's also another one that works out well in terms of a big rally because people are stuck fighting it.
Do you still think retail sales is important, but not when it comes out?
I don't think retail sales matters much probably right now. I think inflation data, if it would wake up, would matter a lot right now. And these indicators, like when we're coming out of the recession, it's all about consumer confidence and University of Michigan and retail, and it just cycles. Since we haven't really had much of a cycle for a while, we've just had this constant grind up, these panics and these moves up. That if people who are newer to looking at the market probably don't, remember or understand that it used to be at each key point in the cycle, there are certain numbers that were so important that you had to be in front of your screen. And now it's just not really like that. I guess unemployment is always kind of important, but right now, I think right now, anything that really ignites inflation will have to put the Fed back in play. So those are data points that matter. But so far, that's been years and years of expecting it and nothing happens. So, but I think data is always, I'm starting to, data is good for day trading to find little trades. But when you zoom out on the data, it doesn't matter as much, I think, as I used to think it does, because so many people have their own team of economists and hedge funds are positioned ahead of time. And they know what data, they have an idea what data is. They're moving around in the market. So it's almost like getting in front of that, in sentiment and looking at news ends up being more important than data a lot of times, because if everyone's got you convinced that it's going one way and it seems like it's butted up against the top of a bunch of areas on the chart, there's really only one way where there's going to be good money made, and that's if it doesn't work. And it doesn't mean you're just constantly fading moves because you see a news story that doesn't, like a stupid news story, but you're just building this context. So then when it starts to happen during the day, you're that much quicker to react. It's like when you've thought about it and planned for it, you're the first one there to play the game when it starts happening. So it's just always more thinking, more planning, and less trading seem to work out well for me. It works out well for me now too. It's when I have too many positions on, I don't know enough about my positions, I start losing details and I start losing money. But when I'm,
Go ahead.
No, go ahead, jump in.
No, so when what you said is like, should be underscored. The opportunity comes when something doesn't work for a whole bunch of other people.
Especially in futures, leverage products, when everyone's trading with super intense scrutiny to every tick.
That's why you have to, there are good locations. You got to make sure you're in good spots, because so many people, if a price is playing a spot too much, too many people are allowed to get long, too many people are long, we're not going up, so it's almost got to be, you got to catch turns, whether it's fading it, staying on the side of a trend if you did identify one. But these S&Ps are so rotational that people come into this business looking for trends, looking for that really nice uptrend, downtrend chart, because those are easy to read. Just sell it, it'll eventually go down, buy, eventually go up. That's not the S&P. It's not the S&P at all. And so you have to find rotations when people are too long or too short.
And one thing I look at a lot now that might help you guys during the day, I used to look at Euro Stocks, S&P versus oil. I always want to know things versus other things, because when you're in this weird perma grind up and you don't know what to do and you feel like you just don't get it, a lot of times it's helpful to look at what is this worth versus other things. So I'm looking at what is the oil sector worth versus the S&P? It's at a very low percentage right now. In 2008, after the crash, financial stocks were at an ultra low percentage of the S&P weighting. So it almost had to come back at some point. It just got too stretched. And I look at stuff like copper versus precious metals, because copper should be rallying more than precious metals. Does the market agree with that? It didn't on the top before it crashed. Copper was getting weak versus precious metals. Treasuries were stronger than corporates. When things like that happened, other markets are not agreeing with the stock market. And that can be, sometimes it's hard to use that when you're day trading, but it can set you up for those big trend days that might happen like a week later, because you're thinking, well, I'm seeing this divergence and these things don't make sense. So I'm looking at stuff like, if I want to buy gold stocks, it's like, what's gold doing versus oil? What's it doing versus stocks? What's it doing versus silver? And then what is just beaten down in every spot, and start to have good chart patterns or stupid news on its own. And then maybe I have a trade there, because I have all these things that, I can lean on as to why this might be a good thing to buy.
That's how you're reading the story. It's all the correlations to find value.
Yes, exactly.
I was talking to Brent yesterday, as a matter of fact, and he's going to come on and do one of these Tuesday sessions also. And he talked about
you guys will like him. He's great. We talk almost every day.
Yeah, that's what he said. He goes, and if he didn't, he says, I couldn't do this. It's so lonely, right? And so many guys,
for sure,
till they find something like me where there's a community or there's people it's just, I don't care how much money you're making, it's still lonely. And no matter how much money you might be able to make, you're going to have a bad week, a bad month, a bad run. And then what? Then it's even more lonely. So making money doesn't make boredom or loneliness go away. And this is this, you can't talk to your friend who doesn't trade about trading. He could talk to you about outside sales or whatever the hell he does, and you could have a conversation, right? If he's a plumber, you could talk about plumbing.
It's really, it's really weird that way, isn't it? It's hard to communicate. Trading is such a cruel, emotional, and psychological business. It's so tough. It makes you feel just brutal. And I know a few friends who are successful business owners and have moved into trading, and it's been the hardest challenge they've had. Because it might seem easy at times, and then when you really get into it, you realize how just, if you have patterns of whatever behavioral issues. What I mean by that is, I'm working with a coach right now, and I'm finding all this stuff that is really helping my trading. I notice that I have a ton of activity when I'm anxious or irritated or a little upset with my performance. I start to just do more trades, and then eventually I blow up. And now I'm starting to pick off that pattern ahead of time. Another classic one is, after a good winning streak, you're setting yourself up for your worst losing streak usually, or your worst losing trade, because you start to think you can trade every price and you don't think about your risk. And when you're coming out of that beat down spot, when you're really cautious, and then you get a little bit more confidence, then you're at your really good spot where you're confident, but you're skeptical of everything. And then on the other side, when you've been doing well, you lose that skepticism and you get overconfident and you're feeling it and you can do whatever you want. And then that big hit comes.
The bubble. You create your own bubble.
Bam, you get whacked really hard, and then you kind of write it off and say, oh, well, I've been doing well, it's okay. And then all of a sudden you're not doing well, and then you go into a full slump and you have to rebuild. And if you can figure that stuff out for yourself, like what causes that for you, that's worth way more. So everyone wants to know, like, yeah, it's great, Brad, all this stuff you're talking about, but how the hell do I make money? Like, give me an exact trade setup. And that's it's hard to believe, but that's less important than this stuff, but when you blow up and how you blow up, and also about how you think. Like, if you can learn from other people how to think better, and you can learn to not do the shit that causes you to have a meltdown, then all that's left is finding some winning trades, which is actually, you all can probably find winning trades. It's just giving it back and doing stupid trades and all that stuff. That's the real edge, I think. I mean, I'm always finding ways to make trades and have good trades, but I have bad trades too. And then I have meltdowns and I get back the trades.
Yes. And you don't know, like, you think you know yourself the best, and then you find out, well, no, I don't. So I just rolled out. I never did this for a period of time, and I had a couple guys ask, and I didn't want to do too many guys, and I only did 3. That it's a one-on-one mentorship. It's over 6 sessions, and I've done a couple with a couple guys so far. And I didn't want to do too many, Brad, because I didn't want to dislike it. I wanted to look forward to every session that guy had, because it's
Sure.
not fair for me charging this guy not to be involved. I wanted to enjoy it. I wanted him to know that. And so far, that's how it's gone, right? Well, what this has done, and I've learned from because I structured the sessions, but not too hard, because you got to be flexible and go down the path of that particular person, right? Not
Sure.
everyone's going to have a similar session and throughout 1 to 6 or how many sessions you do. But the point I'm trying to make is the most important thing is what you think is your weakness might be, and you might be missing a couple. You might not be giving yourself credit for some strengths that you have, and you might miss a couple weaknesses, man. And if you could save yourself money, that's making money. Saving money is making money by the way you think. And you bring up an interesting point. It's about how you think and how do I think better. And that's what you only get from like one-on-one, all about you. Because if it ain't all about you and you're in a conversation, yeah, you might find out good things about you in a conversation. But when you're dealing with a coach, it's all about you, right? And it's like, it's not about beating you up. It's not about saying you suck, what are you doing? It's about getting better. And so far, these sessions have went great because guys have done what I've told them to do in between sessions. And I get to know this person, right? So you can't, when you talk one to many, it's valuable. There's a lot of help if the speaker is good. Ton of help to it. When you talk one-on-one, it's exponential because now that person's different. He make one mistake a week, cost him his week, right? He could miss a trade, and that was his winner because he just took a shitty trade. Now that was just think of how different your statement looks, Brad. If you missed a winner because you just caught a trade that you shouldn't have taken, and that was the loser, and it caused you to miss the winner. So now you got a debit instead of a credit. You know what I mean? It's like 180-degree different, your statement, by how you think.
Yeah,
And
it's not
this
as
isn't a
fun to
game you
prevent
just
losing either. No one thinks about preventing losing. It's not exciting, but it does add up at the end.
you don't hear that in the internet sphere of how to be a successful trader. You won't get that in the title of a book because it won't sell many books, right? And you won't get that as educators in this business because they won't sell. They want to market. They want to tell you how much money they're going to make or you're going to make, and they don't want to tell you. It's not. There's no appeal to learn your weaknesses, know how you think. That's not fun. That's not exciting. So you have to know how to manage your emotions, as Ron says, but you have to do it differently than how I manage my emotions because we're different people, you know? Sometimes I'm better. Sometimes you're better in different areas, but you got to manage with that. It's all about risk and all about reward. When you come in to a session though, do you have an idea what kind of day it's going to be? Is there a few things you look at? Not that you're bullish or bearish, just what kind of day is it going to be back when
Yeah,
you were just trading
I mean,
futures?
yeah, it's sometimes a couple ways to look at that. I'll give you one. A couple of things I do to look at what kind of day it might be first. So I look at the advanced decline line every morning when it opens at up or down 1500. So if you're familiar with the advanced decline line, I think 2,500 is the limit. Maybe 3,000 is the like every stock is up or down. So you don't really see that much. 2,500 would be like we're down 80 handles or something if it's minus 2,500. So when it opens like up or down 1,500, up 1,500, down 1,500, that is the day that I'm on alert for trend day the opposite way. It doesn't always happen, but when there's a trend day, when it like gaps up on retail sales and then goes down 50 handles all day, like those days that you get once or twice a month, those days usually line up with the advanced decline line opening up 1,500 and then selling off all day. So that's one thing I notice is a constant variable. So the minute I see that happen, I don't know it's going to happen, but I say this might happen today. And it becomes even more probable when we've been rallying into this number, when everyone seems to be very reassured and excited, and it doesn't make any sense for us to not go up. That's the day when we go down all day and when there's nothing to worry about. So that's one thing I look at, kind of combining the news with the advanced decline line. And then we had one of these a few months ago. It was like some disagreement with China where the market had been going up, and then we get like China wants to delay everything or they want to come back on their commitments. And we opened down like 35 handles and then we finished the day up 20 handles. And that was a classic thing like that where the advanced decline opens down minus 1,500. We had been strong and we just rallied all day long after. So that's one thing. The second thing I look at was, I just forgot what I was going to say now on that.
Second thing you
Well,
look at.
the other thing I was going to say, aside from this, is I don't want to get too pigeonholed into, I know what I was going to say now. Let me go back to what I was going to say. It's the morning after trend day. So there's a big trend day in the market, straight up or straight down or whatever. And sometimes you get two in a row. You almost never get three in a row, almost never. You rarely get two in a row. So it's called the morning after trend day. I picked this up from a guy I used to follow, and this is his specialty. He would actually come in overnight and trade Europe on it and the US. So there's a tendency after a trend day for the moves the next day to break out in a trend again and then get faded. So example, and you have to be careful with this because it could go a lot longer than you think, but generally speaking, it's worked very well. So say we have a day where we're down all day and we just keep pressing to lows and people get kind of scared. The next day, it starts moving down again in the morning. It comes up and then it goes down and makes another low around 10 a.m. or something. More than not, you're going to get a nice, deep, choppy move back up in the middle of the range. And then it goes up through the highs in the afternoon for that day. And then it comes back down into the range. And it creates just this shitty, volatile, but shitty day where it can't really go either way after a big trend day. Even more powerful after two trend days. So I've noticed that mean reversion day tends to happen after everyone is like amped up for a trend. And it makes sense, right? Everyone's jumping in the trend. It's going to reverse or it's going to make another move. And then it just fizzles out. It almost just kind of walks back, and you need to kind of take that into account, or at least be aware of that. So I would call that the MATD, morning after trend day possibility. So those are 2 days that I would watch for. Otherwise, I didn't want to I love what could be the biggest surprise question of a day that I look at. And then I'm also looking at bonds and copper versus precious metals and other things just to kind of see, is the stock market running by itself, or are these other things that would go with the market doing it too, and just kind of getting my bearings that way.
Is there a leader, so to speak?
Right. Is it like, and that's another one, is Amazon beating earnings? And is that stock causing us to rally? Is that the thing that's happening today? And once in a while, that's the story. And you watch that stock for the day, or even better, you watch that stock 3 days later, and then it starts leading the market around, and then they drop it and they don't care and they move on to something else.
Right. That's why it's like people who trade like every day scalp intraday stocks, they're not trading the same symbol for any more than a couple days. Yeah, not the way you trade necessarily, but the way these guys scalp. I know a friend of mine, he trades and he's doing pretty well. You could tell by the houses he buys, plural, that he's because you know the game when you're in the bathroom at work and someone would say, "Hey, how you doing?" You didn't say, "Oh, I killed it today." Nobody would say that. No, it was all right, not bad, okay. That's what he tells me all the time. I says, "How you trade?" "No, it's all right." But yet I know he's doing well. But anyhow, they're not trading the same symbol for any more than a couple days, right? They're just looking for moves with liquidity, and then that fades, and then they move on to something else. What were you going to say about being pigeonholed?
I don't want to so I stopped using price alerts on my stuff. I used to use them because you get pigeonholed when you start. One of the biggest problems I had was I'd start making scenarios, and I'd say, okay, if we make a low in the morning and come back and consolidate, I think we're going to go take up these stops at the high of the day or some important level from yesterday. So I have some scenario. I start to think that just because I thought of that, it's going to happen. And I start trading almost like predicting it. And when I get a strong opinion in the morning, I start just wanting to go with it. And it causes me so much pain when I'm wrong. So I'm really working hard to let things just unfold. Everyone probably notices that when their best days are when they kind of are bored and don't expect anything, and then something just shows up. At least for me, it was.
This guy Tom asked me in the other room. I wrote it down. What do you do when your emotions do get compromised? You know what I mean? When you
fight with this your whole career, and I've hired someone right now that I'm spending a lot of money on to help me figure out my patterns. And she has me. First of all, to start with, that is when you're paying somebody to help you with something, you work on it 10 times harder. It's like, I don't need to spend money. It's just the same thing that's in a book. Yeah, that's great. But when you hire a trainer, you go do more workouts. You can read about it in a book. So I do spend money on things that are personal development, on things like this. So she's got me writing in my journal every twice a day, maybe, and about trading, but also about life. And I write today I woke up and I just am kind of irritated. I'm feeling anxious, and I'm just kind of a little grumpy with my wife, and I just feel pissed off. I don't really even understand it. And I'll note that. And eventually when you talk in the sessions and you go back to other times in your life, you start to figure out that when that happens, then other things are about to happen in your trading. And those are the days now I've finally gotten to the point, I think, where I'm pretty good at just saying, I'm going to not trade today, or maybe get out of some stuff and just really be careful. And it can happen on the upside when you're really excited, because at some point, the way the emotions work is it's a spiral, it's a loop. Once you start spiraling, you kind of got to let it finish. It's almost impossible for you. It's like when you really are pissed off about something and you just blow. It's really hard for you to stop in the middle of that explosion. You already are screwed because you decided to blow. Once you decide to blow, you got to finish it off. You almost got to just get it out. So with the emotions, it's the same thing. Where if you're gonna blow up because of some emotional pattern, you're gonna have to review that later. At least write it down and keep the trades, put them away, and then 2 weeks later go back and try to learn from it, or hire someone to help you learn from it, because you are going to need to see those things happen and see those things coming. There's tons of precursors. For instance, it could be as small as, I'll tell you one that I had. Someone said something in a forum I'm in, someone who was really focused on only biotech stocks. And this person was pretty good at it, and that's all they did. And I was having a day where I was scattered and doing a lot of different stuff. And they don't post much, and they just kind of had a really particular post about a certain stock. And I started getting all this self-judgment about, well, geez, look at this person who's so focused on their area. And I got 10 things going on, and I've lost track of what my focus should be. And then I started to doubt myself. I started to get upset. And I started to just feel a lot of self-judgment and just thinking that I needed to be more like that person was being, because it seemed like it was smart what they were doing, and I was all over the board. And then I went and just cut a bunch of my positions down and stopped trading as much, because I could feel that it just didn't feel good. I was in a dangerous spot. So just the little things like that. And once you do that, it calms down, it simmers, and it goes away. And when you write it down, it's almost like you give voice to it. It's like confessing something you did to somebody and you feel better after. It's the same thing. You write it down, and then, but for years, if this is any comfort to anybody, for years, I did this and then did it anyway. I'd write down and then I'd blow up anyway. I'm angry, I'm upset, and then I blow up anyway. And I was so self-defeating. But when I actually hired somebody to help me and I kept having accountability, I started to kind of actually write it down, and then, excuse me, I started to write it down and then not blow up after. And that's kind of where I'm at now. And then who knows, I'm sure I'll have a problem again, but it's really feels great when you start to catch yourself. If that answers it.
That answers it, man. That's good. You want to show us
Lift
this trade? It's just, what's amazing to me is, I got to say this, is that we can never talk enough about trading, and whether it's X's and O's like he's going to talk about now, or how you feel. Because as much as we get mad, it's like you're going to get mad again. You're never going to like eliminate getting mad, right?
Right. I'll never go out of style to talk about. It's like you in 12 to 18 months, you learn all you really can about. You're going to build valuable experience about seeing different trends and different bear market, bull market. That's super valuable. But just because you stare at the market for 10 years doesn't mean you're going to be good at it. It's mastering yourself. Mastering this stuff is the lifelong work. It's the work that is, no one really wants to do it as much, and it seems boring. Yeah. But what's your favorite setup? Well, my setup might not be good for you, because you might be more conservative, more aggressive, different time frame. You might just not jive with the way I trade. And you might be a long only value investor, and I'm shorting and I'm in commodities and things that you would never want to do. But we can really learn from each other on other things, risk management or thinking about the overall market. You can't ever trade like somebody else. I always say the same thing, because it's one of the, I wish that could go on my trading gravestone. You can't copy other people. You have to make it your own. And eventually everyone figures that out somehow through pain and suffering. Usually I still make mistakes like that, still get sucked into doing things that aren't my own. And it's always.
But what's your setup? Let me question your setup. I started getting mad because when you put yourself out there and you sell something, you always get people to say, well, who are you? And then you could get mad because you know who you are, but that's a good question. And you just tell them, here's who I am, right? I'm not an author of a book that never traded. Buy that book. Go ahead. I come from a venue of we're professional traders that you want to be, worked at, came at. They didn't hire everyone they interviewed. Some guys got fired or quit, could make money. That's where I come from. So it's like, and that's where you come from, and that's where people don't even know that that's the venue, right? So it's like I played professional football. Well, where do they play at? Well, the stadium. What do they look like? Well, they got pads on, they got helmets on, and then you go to the guy and say, "Aren't you trying to be a professional football player?" Yeah, but I didn't know about the helmets and the pads in the stadium. Well, what do you mean you didn't know? Every high school football player knows what football players look like, but every trader doesn't know what traders act like, think like, talk like, where the venue is, and everything else. Until maybe they hear us talk. Until maybe they could separate and compare those that bloviate, right, or write books.
You got to learn to smell the bullshit yourself. Once, if you're doing this stuff and you're getting suckered in by people, then you're the sucker until you're not, because you don't need to know. You can kind of just tell what makes sense and what feels true, especially when you're in other businesses and you have had success. You just know when someone's full of shit or when something makes sense and you connect with it and you just go with it from there, or you move on. It doesn't, no one's ever going to sell me on something that I don't really believe in. I'm just going to kind of feel like, yeah, I understand, this makes sense to me. And then you work down that path until you're done.
No, it could never go out of style the way you just said it. And getting mad will never go out of style either. You're going to get mad. It's just try to minimize it. All right, what do you got here on Lyft?
So what I got here is might be useful to some people. So this IPO comes out, and what happened is I've never seen so much negativity on an IPO in my life. This is the biggest piece of shit. USA Today, front headlines. You should never own Lyft. You should never want to participate in this IPO, this money bleeding, money losing company, and yada, yada, yada. And that's what I heard. I don't really care one way or the other if that's true or not. That's just what I've read. That I cut out different articles and posted them, digital cutouts, and said, I mean, this is crazy. So I watched this thing get hammered here for 2 or 3 days. And then I was in a stock group with a few guys who trade stocks, and one of them mentioned that Uber IPO is coming out soon, and it's way bigger than Lyft. So I thought, well, if Uber IPO is coming out and it's way bigger than Lyft, and he made the same point, do you think that they're going to tank Lyft, just run it into the ground with everybody being negative and having a much bigger IPO coming out next, where a lot of people need this to go well? So I'm already setting up the stage for some kind of a buy in the stock, because so I'm waiting, and I can't just buy it when it's going down every day. So I'm waiting. And then kind of out of nowhere, we get this move right here. You see this big move from like 66 to 70.
Yes.
April. Okay. So that happened. So that was the first time where I'm like, okay, maybe we put in a bottom. And then we come back down and we make a low. We come up, and then right in here somewhere, there's a headline that Carl Icahn sold all of his Lyft to George Soros. And that came out twice. And there's another one like that too that happened like right in here. So I started buying it right in here, and then I bought it again on this spike down in here. And I was using these little, I'm not a big indicator guy, but I was using these Bollinger Bands as kind of my area to buy the bottom of it, because I was bullish and I was just looking for something to use. So I bought it, and it doesn't look like much, but it was like 67. It went up to like 69. I think I took a little bit off up here, and then I wrote it. I held this trade for a few days, and I ended up eventually getting out of it. I got lucky and had some good outs. I got out of it up in like the 74 area or something. So I picked up like $7 or $8 on it, and I got out some of it at 69, 71.
So you were bullish and waiting for timing and then location. So
yeah,
bullish.
Like I was primed because of the negativity in the Uber IPO. I knew that they didn't want to, that this thing had to have, they didn't want to have this thing be a disaster into Uber. And I knew that everyone hated it. And it was just like, almost like a joke. And then the third piece of information is on IB, when you want to short it, it had like some absurd, like 40% fee to short it. So everyone was shorting it, and it was really expensive to short. So I'm just looking for a reason to get long at this point. Not in the long term, just for a trade.
Yeah,
I just going to have a bid under it with all that going on. Now it's back down and I'm done with it.
So Icahn selling it to Soros should have been more negative than it was.
Well, no, my point on that was that like everyone panicked on that headline because they thought, oh, well, another reason that Lyft is a piece of shit. Carl Icahn, he's so smart, and he doesn't even want to be in this thing. And at that point, we already had the pop up.
So that's when I started to. So this isn't the cleanest trade in the world, but I think the reason I showed you this trade is to give you an idea of. I think that a machine isn't going to come in and take away this kind of thinking process, because there's a lot of things going on here. But I'm thinking about it from 3 or 4 different levels, and it's not easy, and there's no big sign of when you need to buy. But I'm building a case, and then I'm trying to. Once I build my case and I get that move out of the hole, and there's those failures, I'm trying to use that stupid news and then a little bit of technical indicators to ride this thing up. And my target, the IPO price was 72. So my target was to kind of eat into this big red bar here on April 1st and take out that IPO price. And we did. And that was kind of when I started lightening up. So
where did it come out at on day one?
Out at way up here at 88.
Wow. And they stepped all over day one.
So you look at this chart right now and you say, well, there's nothing to do here. This is a bunch of junk. Well, I mean, for me, this is my best trade of the week.
Yeah.
So it's just, you know, you can see under the hood, there's stuff going on in there, but you might not know it. So, and I didn't have to look for this. It just kind of came to me from just seeing the news and kind of got pulled towards it. So this kind of thinking tends to work better for me than other things because it.
Yeah, so you could have never. Go ahead.
You know, it's original and unique, and it makes sense to me.
You could have never predicted your price you were going to get in, or that it was Icon selling stock to Soros, but you were ready for when it happened.
I was ready because I thought like this might be an opportunity for people to get stuck. Yeah. Oh, and then I can add another piece is going into the weekend is when it started to really rally on Thursday and Friday of last week. And it makes sense because people were getting scared as it started coming back, holding those expensive shorts into the weekend. Everyone's thinking, shit, I don't want to hold this into the weekend. It's costing me a fortune. And then you get that move up.
This trade found you is the other
found
thing.
Me. Yep. I had no idea. I thought I'd never ever want to trade this stock, and I ended up trading the stock.
There's that saying, I don't want to say I coined it, trade what you see, not what you think, you know? And
yeah.
But then someone in the room, in fact, Brent's nephew or uncle-in-law, he's from Indiana. He's been a long time edge guy. And he says, and I got to repeat it because it's great. He goes, if you see a trade, take it. If you were looking for a trade, once you find it, don't take it.
Right, because you're confirmation bias, just looking for a reason to sell this thing, looking for something to sell. It's like, well, usually you're missing out on. It's like you always look for the things wrong with your stocks when you're already in them, not when it's hard to do.
Yeah, just let it come to you. You were bullish. You were waiting for the timing to buy it. You didn't play price to get long. You played a story where you trapped a lot of people short. Icon smart. It should go down, and if it doesn't do what it should do, it's going to go the opposite.
And Icon, who gives a shit what Icon did before the IPO? We're trading right now. It's just totally irrelevant.
Right.
That, it doesn't matter.
But the retail money thinks Icon doesn't want it. I don't want it.
Mm-hmm. Sell it. Exactly. Yeah. Yep. Exactly.
And Jim, this looked like a similar chart. I don't think this company's like Facebook, but Facebook did the same thing. They opened like 35, 36, went to 14. Now they're 190 or maybe.
Yeah. There's a lot of good trades of thinking like this in Facebook. Then that was a great one that he's mentioning. And then there was another one. I did a short last year on something like this, but these trades, did they come to you when you start? So I'm just trying to keep developing my thinking process so I can find more trades like this.
Is that list under Brad Daly on the right side? Are those stocks you're watching?
Yeah, what I do, there's stocks I'm watching, and what I do here is I break down things into news and events, market indicator, grants, interest rate observer, gold, silver, fracking, crypto, China, small cap, weed. And the reason I do that is then I can start to get see the market in themes and buckets that I'm looking at and seeing how are these doing today. Because I used to have one big list and I got just confused. So now I break them down into little groups. This might not be so valuable for your futures trading, but for stock trading, I like to kind of see what's moving.
The weed stocks move?
Yeah, I'm short weed stocks right now.
Why?
Because everyone else is in love with them, and I go to Robinhood. In Robinhood, the brokerage, then the top stocks in there. The top 3 of the top 10 stocks are marijuana stocks. It's like GE, Apple. That's one of the reasons, but that's not the only reason. I just think that they're we had this wild overvalued run up, and just kept going and going and going. And I've been reading some of their conference calls and earnings reports, and they tuck the numbers into the 10th paragraph, and they talk about all the partnerships, and they keep talking about the technology technology differentiates us. So what does that mean? Well, we have these strains that we blend that are proprietary. I'm thinking, this is just, come on. And then I just watched the charts and try to build off of some stupid news to enter. So CGC is one of them that I'm short, and then Cron. But on CGC, this was one of my better trades I had last year, right here on November. See where I'm moving my mouse?
Mm-hmm.
So
what was the news?
Okay, so it went down from 60 down to 32. And right about in here, Jeff Sessions, the old
Attorney General.
Attorney General, he's an anti-marijuana guy, and everyone knew he was about to resign, and he resigned, and marijuana went from 37 to 47. I mean, on his resignation, and I just kept selling into that all the way up because I wanted to be short, follow this last move down, and then that was the stupidest news I could imagine. And all these moving averages, everyone expects it, bottom of this range. So I knew, like, I'm not risking that much, and that was a trade I really liked.
Like that, not policy didn't change because he resigned, but that was the expectation.
Yeah, just getting a guy who doesn't like it out of there, but everyone knew. And then in here, probably doesn't look like a lot, but there's a few of these spikes up were on really dumb news, like Seth Rogen has a partnership with us, or we're having this new strain of, we sounded like a Coke, a CBD Coke, and then all these things, and it would come up and the market would just come back down, and come up and it would come back down, and now we're just flagging down here, and I just feel like this is going to eat back down in these areas. So same thing with this one. I felt like
you have a bias and you wait.
Yeah, you're waiting
to rally it or break it.
So this was some stupid news here on this one up to 24. I forget the actual headline, but there was a few of them in here. And when we started to not be able to go up in the good news right around in here, some of these green bars were those days too. And then that was the end of it. There was an earnings in here somewhere where it was really bad. The earnings, it went down, went all the way back up and took out the highs by a few cents, and then went all the way back down to the lows. And that was kind of a sign for me as well that you can look at this too as in your futures. It's like having data, and we take out the high and buy a couple ticks and then finish at the low. Well, that's not a good sign if the data was positive. Same thing here.
My brother-in-law is a COO of a one of these companies. I don't know if it's one of these. They're publicly traded now. I don't think they are, but they go around buying stores and existing stores and the licensing that the people have to have. You know what I mean?
Sure. I'm not saying it's not. Here's another one. I mean, look at these are all dogs. This is another one I'm short here. This one. It's one of those things where, yeah, this could be great, and I understand that marijuana is this growing business, but the stocks got priced like they've been
too high
10 years and everything's already in the market, but it's not. So, and then I'm just kind of using the news and trying to figure out ways to enter when it kind of stops.
Well, it's like technology in the late 90s. They overpriced those and only a few were going to make it. And that might be the same with this, right? They overprice all these companies, and when they consolidate, who's left?
I think the bigger key to take away this isn't anything about the marijuana, is more is about I had an idea and a setup, and then I'm I have it in my chamber, and I'm waiting for reasons to get in when stuff shows up, like that Jeff Sessions news or in the lift. I might not have bought the lift if it just kept cratering, or I might have couldn't help myself and I buy it really small, but eventually I'm putting on a bigger position when I get that support in the chart, a little bit of a base, and then especially like it when it starts moving up and then it comes down on stupid news. Those are my favorite ones. Have an idea, seems like it's turns, and then retests the direction that I want to go on something that just doesn't make sense, and then I enter. It ends up being a really good time to enter.
Seth Rogen was the best one.
Yeah, that's, I forget which company. I think it's Cron has the Seth, and that popped the stock like $1 that day or something. And there's another one where in New Jersey they were making it easier for weed companies to borrow money, and everything's up 5-10%. It just doesn't. So if you have the idea, there can be good little trades to do in there. If you don't have the idea, then it's probably just nothing to do. I don't know.
Yeah, you don't want to react to every stupid news the way you put it, but you want to have a bias going into the stupid news. And this is your opportunity to take. Well, now it's a curveball. You're sitting on a curveball. He threw you a curveball.
Yep, exactly. I can show you one more. that happened like that. There's Facebook. I might have showed you guys this one before. My chart. Here we go. Okay, so Facebook's rallying forever. So follow me on this one. It goes down here from 185 to, I'd say 150. And this was when, let me just get this, let me figure out when they were drugged through Congress. No, that was, okay, never mind. Start at the high, 220. Gaps down to 170. See that on earnings here?
Right.
That was, so you had this narrative of Facebook makes money because we're all giving them our data. This needs to stop and we should own our data and all this stuff happens. But Facebook's just making money and nothing changed. Then they came out with earnings and said that we're going to have double the expenses and less revenue because we have to hire people for regulatory stuff because we're just kind of under attack and we're basically our expenses are going up and our profits going down. Stock gets crushed. So that's kind of confirming all the stories and it finally just happened. It actually happened in the results. Goes to 170. So I want to sell this thing because I was bearish on it and I finally got but I don't want to just sell the bottom of this crap here. So then it comes up. See this move from 170 to 188?
Mm-hmm.
This huge green bar here was on a news story that Facebook and JP Morgan are going to start sharing data with each other, which I think just doesn't matter at all, means nothing for this Facebook story that I'm looking at. And so that was my stupid news. So I worked into it that day. I could go to a smaller chart, but probably have to scroll back too far. But I worked in my position that day, 184, 187, right in this area. And I think I had my stop. I don't know. I think I was going to give it some room because I really liked the trade. And it just turned down from there and ended up going all the way down. And then down here, it got to be the end of the world. And Facebook is going to have a new business model. It's going to be declared a monopoly. And then, of course, it rallies.
The stupid news idea is so great because if you're wrong, at least it rallied into your short. So you've got, it's got to go again, another almost leg up if you're wrong. So you're just, but if the news is wrong, the downside is exponential.
Yeah, and I've tried just doing stupid news trades when I don't have an idea, and I end up just getting too many trades on, and some of them just keep going against me, and I lose money. And I need to have like a solid thesis, and then I can use that to help enter. But I can't just trade on the news being stupid because sometimes it just keeps getting stupider. You have to have like you have to have a notice that this and the marijuana had broken charts. Like look at this, it broke, it got crushed, came back, checked, and then it retested. Look at this one. I was doing it right in here. It had a huge move down, and then I'm doing that retest up at a good technical zone on the stupid news. So it's not like, it's like I'm waiting, and same with the lift actually. It's almost like it had its time, and then, so I'll go to the lift. So I got in, so I waited for this first move up right here out of the hole, which just happened on its own. And that was kind of the sign that maybe this thing's done. And then I waited and just kind of sat around for a while, and then it kind of took out this 67 area right here, and then came back and I love the retest, so that second little retest, and it kind of got real quiet. And I think there was that stupid news in here, and then it just kind of walked back up. And we did get a few other dumb news headlines. I don't remember if it was here or here, but we got something else similar, and it just kind of kept fighting it and rallying, and finally it kind of pushed everybody out, and now it's back in the shitter here again. Who knows what it's going to do now?
Well, I always tell people I visualize two circles, and where the circles overlap is where your strengths are. So the first circle is have a bias. You want to buy it or sell it for X, Y, Z. Then your other circle is the stupid news, because if the stupid news is your only circle and you don't have opinion, long or short, that's when you just said you have too much on and you get chopped up. It's neither here nor there. But when you have an opinion, your bullish lift for X, Y, Z, you wait for the timing to get you long, or bearish Facebook. You weren't man, think of how many people will sell in that gap lower and be stuck in the hole, get shook out, and they were right. You know what I mean? They would have had money in the trade. They'd take too much heat because they sold it way too late, but too early on that day. And they just get smoked.
Yep. And sometimes I just can't help myself. It's like, I got to get in this, and the chart isn't quite. I'll do it small then. I'll say, all right, I'll put on 25% of my position, and I'll just let it kind of move around and watch it for a while, keep me entertained until it sets up.
One last question.
Yes.
And then we'll finish up because it's been an hour. Do you have any thoughts on how the market's kind of not medium term, ES, NASDAQ, are they extended? Or what's your thought on indices?
We were just talking about this in the stock room I'm in. It was kind of on that attitude that they're going to walk back through the highs because no one expected them to. And now I think that's getting a little bit more of a common thought. I'm focused on the China deal and the Fed and thinking that with those things out of the way, it gets me a little more nervous about the market because what's the wall of worry to climb? And I know that these things could take time, but if I'm right about the dollar coming off and commodities being stronger, it's probably going to mean the market starts to get more of a choppy downward bias to it. But boy, it's hard to. It is. Let's put it this way: if I'm going to buy a bunch of long positions, I'm not doing it here. If I'm holding some stuff that I'm long, but I'm not adding to longs here because it just seems like it's not a good risk to reward to do so. It doesn't mean it can't keep going up a little bit. It certainly could.
Because all the good stuff is already priced in, and it's
it seems like it is. It might go more, but the good stuff is priced in, and we've all seen that last 5% that you're fighting for, and all of a sudden they take it all away in a half hour when they turn. So I don't want to get in trouble with that. So I'm kind of just cautiously staying in the stuff I buy, and then I'm short some stuff I don't like the marijuana stuff, and not getting super committed. Sometimes the best commitments to make are when obviously you buy the lows in December. Well, that's great, but it was pretty scary. But then when it started coming back up at some point in the middle of that range, it got to be a pretty decent trade where it was low risk to be buying it. And then it just kind of quietly walked up every day and you didn't really feel a lot of pain. Sometimes those are the easier trades.
No, I hear you. Did you learn mostly being able to take the fundamentals and apply them as a day trader from Scott and Scott?
No, I was inspired by them, but I had to kind of I'm learning more about it now, even after I'm out of the indexes a little bit more. Those guys did it a lot. And I guess I've learned to start looking at the news even more and watching when people are going to get super excited or super pessimistic, and then watch what other indicators are doing and seeing because a lot of times the stock market becomes unhinged and moves on its own and people get real excited and it's sitting up there, and then you see some of these other macro indicators, junk bonds and copper versus precious metals and corporates versus treasuries. Corporate should be stronger than treasuries when the market's going up, and you see these things starting to disagree, and then it could take months sometimes, but then over months it starts building this divergence, and then the market. Those are times where I'm always just on the lookout. I'm a little more cautious.
You know what's funny is to your stupid news, and I like the way you frame that. It's like a great analogy. It's stupid news is like people get excited on stupid news and they'll buy it, and it's like in baseball, you're losing 7-0, right? The home team's losing 7-0. There's 2 outs in the ninth. Guy gets a triple, and everybody cheers. If you could sell that excitement, they ain't gonna win. There's 2 outs in the ninth. They're down 7. What are you getting excited about a triple? If I could sell that volume, right, that noise, you'd make money. It's a good right? It's a good location. Yep. So that's what people do. They get excited. It's like, for what? A guy hit a 2-run homer. You're still down, so you got 1 out. You're gonna lose.
Exactly.
You might have an unbelievable 7-run comeback with 2 outs, but 3-run homer didn't make a difference to me.
Sure.
Better location to sell. And that's the thing. So, but Brad, this was awesome. You know, can't thank you enough. It's exactly what I was looking for, and they were looking for, and I recorded it. And your podcast, Brad isn't doing this, doesn't sell anything. It's same thing with Brent, who's going to come in a couple of weeks. It's just like,
you guys let me know when I got something I should sell. I don't know what the hell I'm supposed to sell.
Yeah, he doesn't sell anything. And that's because there's a lot of guys that are selling things, and well, including me. I'm not guilty of it, but it's like if I go out and present, there's that ulterior motive, and I'm fine with it. If you got something to sell, you're putting yourself out there.
Well,
but
if you're coaching or helping someone, that's a valid thing to sell. I mean, that's super valuable to get help on working through issues.
Right. I'm not guilty. I don't feel guilty at all for it. There's giving them the better chance, and that's what's great. It's a black eye in the education world because so many guys, Brad, never traded and talk as if they did, and they don't. you know, they couldn't even have a conversation. We would talk to the guys that are making a lot of money selling trading education, and in 30 seconds you'd be like, I don't even think this guy knows the difference between a bid and an offer, you know. So there's a black eye for
Then
that.
you talk to these people and they sound great, and then you talk to someone who's making money and they just trade some little niche on a corn report or something, and you find it just doesn't. It's not
Simple.
sexy to sell that though.
Simplicity is
Yeah.
the difference. It's like, why didn't I think of that? The whole, correlations. Why wouldn't I look at different markets, or the stupid news idea that you have to find location on a bullish or bearish bias that you had going in? It's like you're stacking those, and then talking about the emotion and really what's important, the psychology and how that could change, and why your weaknesses cost you money. How do I play away from them? I didn't know I was that bad. I didn't know I said that. I mean, those are the professional things that you talk about and do. But I bring it up because people really like when someone has there's no motive or anything else. Brad does stuff with Credelli on CME, and so does Brent. And to come here, it's pretty cool that you guys are doing it, kind of giving back in a way because of a great career that DE offered us. If you think about it, what would you have done without that? You don't know what you'd be doing.
I'd find a way to do it somewhere else is what I would have done.
Yeah, well, that's true.
A way to get in somehow, but yeah, that just ended up being a really good place to get in. So.
Well, I mean, like the timing before it existed,
Oh yeah, I don't know.
It would have sucked because it would have been harder to do what we did if it wasn't as exciting. We had to go to the exchange and trade on the floor, but that's
probably
kind of
would not been happy about that. It's almost a different world, but yeah, I don't even know that world. Never had to do it.
But let's circle back in a few months and see how it's going with your coaching and the woman helping you out. But thanks again.
Good luck, everybody. Yeah. Thank you. You too. Bye.
Bye, Brad. I'm going to take the screen back from Brad as he left. You can mute your mic, Brad. And I just wanted an update, you guys, on the CME micros that we did last week. Are you guys seeing my screen? Yeah. Let me show it. The May 6th, we didn't know this last week. It was just May. It's May 6th. I got an email from the CME. And then an update on commission. For right now, it seems like commissions of what a broker charges is not going to move initially. The exchange and clearing fees, which are the two biggest fees anyways, will come down quite a bit. So we'll keep an eye on that. A few weeks, May 6th. Take a look at it. Let's not predict if it's going to be good, bad, or okay. Let's just see the kind of liquidity after a few days. If it's real volume, which means it trades. Difference between liquidity and volume is liquidity is volume that actually trades, not just sitting around. And we'll see if it has that, because it's going to be a really good option to demoing and give people a chance to practice with some skin in the game if it's got some liquidity. But May 6th is the release. The other thing is, don't forget to go to this link that I gave you on these new Edge Zone audio here inside the charts. I had someone develop it because I liked it, and I'm not trying to make $1 million on it, just paying back his labor for it. You guys will have it. It's not expensive. It's $70 for a lifetime of having a male voice, being aggressive buyers, female voice. You don't have to have the Edge Zone visual, but you have to have Sierra Charts. Only works on Sierra. Well, there's cool stuff that I'm going to have him do with it aside just Edge Zones. But get it and try it. If you don't like it, it's $70. You guys have wasted $70 on a lot of other things. This won't be one of them. You could actually adjust the volume. You could adjust the accent. You could have the NASDAQ aggressive buyers and sellers be British and whatever, so you know it's different. But there's some things that go around doing. I think it's like I said, when I talk about this, it's introducing one of our senses that we don't use, our ears. When electronic trading came to the way things are done. In a prop firm, in an office, you got sounds of gasps and people mad, and you got that environment. Well, when you're in your home office, even though you're a trading room, maybe listening to me or listening into the team room, you get some of that, but not as if you were in a physical office. So the sense of hearing is something lost And you don't need to hear a bunch of crap. You know, there's a company that you could have a million things squawked out at you and none of it matters. I'm trying to roll this into emulating what the sounds and matching them to what it means to what buying sounds like, what selling sounds like. So get it, watch the video, and I'll post this video with Brad in a couple hours. It was good. Just an update. His buddy, I always knew Brad more than I knew Brent, but I knew Brent at DE, which is the company we worked at. And as Brad said, they speak every day. Well, I spoke to Brent yesterday, and to line up, he's going to pick a Tuesday somewhere in the near future, and he's going to come on and do a talk like Brad has on Two Smart Guys, both of them on Credelli Radio and CME Radio, CME TV. So look forward to that. Steenbarger in a few weeks, I think May 7th, about a month from now, Steenbarger is going to come in on this session. There's been some guys in here that I invited from, I think, Peter Davies' event, but I'm going to have to cancel your registration unless you're an Edge. You bought the Edge stuff. If you're a comprehensive Edge member, you can keep coming. If not, I got to cancel your registration just to these Tuesday sessions. I gave you a little bonus, but these are just for guys that are Edge members. Go ahead and do the Edge course, and you'll have all this access. You'll like it. You'll like it better than reading books. And remember, there's a reason why I put laugh in laugh, learn, trade. If you're not laughing, you're not learning, and you ain't going to be trading. Got to have a sense of humor. Got to let your hair down. You'll absorb more, and you'll be able to attack your weaknesses better. Have a safe rest of the session. For you guys I don't see in the trading rooms, I'll see you in a week.